Senator John Heinz of Pennsylvania. Is it a good idea to place a tax or a user fee on deposits in banks and savings and loan institutions?
Well, Jim, the short answer is no. And the long answer is that we have the lowest savings rate, around 3% in our history. And I can't think of a less desirable way of bailing out the failed and failing S&Ls than to discourage people from savings. We should be looking for incentives that go the other way.
Were you surprised by this administration proposal? We should add it's not a formal proposal.
I want to be fair to Nick Brady, the Treasury Department, and the Bush administration. This was obviously something that was leaked. I suppose it goes into the category of trial balloon. Someone asked me, why would they leak a trial balloon like this? And I guess that the choices truly are all unpleasant if any taxpayer money is going to be used. And we hope it isn't, but we all suspect that some will be necessary. And maybe this is an effort to make any of the other proposals look good by comparison.
You think they looked at all of them and thought this was the best one to float first?
Yeah, this was the worst one, therefore the best one to float first.
Okay. What do you do then?
Well,
that's the obvious question, I guess.
First, I think there has to be a resolution of a couple of key issues. First, how big is the problem? And how big is the problem we need to deal with? And they're not the same question. The problem is, if you look at the value of the assets of the S&Ls, is that it's probably an 80 or a 90 or a $100 billion shortfall, assets versus liabilities. Now, there are some people who say we ought to deal with all of that right now. First, I don't think we know how to deal with all that. I don't think we know how to come up with that much money, and I would argue we shouldn't. What is important is that there are many S&Ls that are limping along, that who are losing money as they operate. Those are the S&Ls that basically should be closed or their management changed, taken under trusteeship, sold to people who can manage them well. And that is probably closer to a $30 billion problem. But there's a big difference between 30 and $100 billion. And so the first thing we have to do is agree on the size of that. I think the first priority, and the only priority we should attack, is dealing with the S&Ls that are hemorrhaging.
There is a plan under consideration to place a charge or a user fee or tax, depending on what you want to call it, on deposits in some banks and savings and loans to help pay for the bailout of other savings and loans. That is our topic for tonight, and joining us is Senator John Heinz, a third-term Republican from Pennsylvania. He is a member of the Finance and Banking Committees. He was elected to the Senate in 1976. He also served in the U.S. House of Representatives from 1971 to 76, and has degrees from Yale and Harvard University, originally from Pittsburgh, Pennsylvania. We'll be taking your calls in just a few moments. The numbers will be listed throughout the show at the bottom of the screen. And once again, our 30-day policy. That is, if you've called in within the last month, let's wait and give someone else a chance to get through. Senator, how realistic do you really think this proposal is? Secretary of the Treasury Brady was on the morning news shows this week talking about it. It's received a great deal of attention.
Jim, I don't think the proposal to have a tax on savings, as it's been described, is at all realistic. At least it is going to be the last choice of most of my colleagues. And that's for two reasons. First, I think most of us feel that you should not be talking in the first instance about going to the funds of the General Treasury, where we don't have any funds, we've got deficits, and saying in effect, well, we're going to start by talking about how the taxpayer, the general taxpayer, who is the saver, is going to bail out these S&Ls which failed. And I think that is politically something that's very unattractive to start talking about for good reason. People feel that it's a problem they didn't create. Why should they bail it out? Why should a saver in Pennsylvania or even California, where there are some of these troubled S&Ls, why should somebody who hasn't done anything wrong be the person that the government turns to first? In fact, I think we should look first to the resources of the housing finance system, and most importantly that includes the regional system of home loan bank boards, where there is, to start with, a substantial amount of money, of equity, that could be very useful in helping frame a financial solution.
Do you look at this charge as a tax or a user fee?
Well, you know, that's a semantic game, and I suppose if it really comes down to that, we'll be dissecting the anatomy of it to find out if it's a duck or not.
But that argument has been used by the White House.
That it's not a duck.
That it is a user fee is different.
Yes, and as you know, whatever it is we claim as a user fee, irrespective of whether it is or not, is simply a question of semantics. I don't happen to believe that the fee described by Mr. Brady or anybody else, a fee on somebody putting their money into a bank, which goes into the general fund of the Treasury, can be anything except a tax. If it goes to the general fund of the Treasury, it's a tax. It quacks.
What would you tell President Bush when he said that it's similar to paying an entrance fee to a national park? I think he used Yosemite as an example.
Well, the first thing I'd like to know is who has been playing with our money in that park, and why is the park in such a mess? Secondly, I'd like to look at the responsible parties and see what they can do to repair the damage. After that, I'd look to visitors to the park for additional revenues, but I would try and tailor any of such revenues in a way where those visitors get that money back, because if it's a deposit, let's have it returned.
How much money are we talking about here?
Well, as I said earlier, if you want to solve the entire problem, you want to take it all at one gulp, it's probably an 80 to 100 billion problem. It's very speculative, because you're talking about the value of assets. What is commercial real estate in Houston worth? Well, there are beautiful condominiums down there that I've seen with my own eyes that are, if they were located in almost any other city, if they were located in Pittsburgh or Philadelphia or San Francisco, they would be worth each unit a lot of money. In Houston, they are dynamiting them because there's no one to live in them and it's too expensive to keep them up. Maybe 5 years from now, 10 years from now, those assets will be worth a lot of money. Maybe we'll figure out some way to teleport them, but right now, to give you an idea of how hard it is to estimate the problem, it's a buyer's market and they're not worth much at all. I think the size of the problem that we ought to be dealing with is that of the failing S&Ls, the ones that are generating losses, the ones that are engaged in unsound practices, and that is about, as far as I can tell, about a $30 billion problem, and it's much more manageable for a variety of reasons than the bigger figure.
Let's go to the phones. Lafayette, Indiana, you're our first call. Go right ahead.
Yes, I had two questions. At the outset, Senator Heinz mentioned that we need to do more for incentives to cause people to save. And as I recall, in Europe, especially in Germany, they have incentives for savings. One of those is they don't tax the interest on savings. And I think the other is that there's even some kind of or at least it used to be a few years ago, where they actually kicked in a little bit for the amount you saved. I don't know if that was a payroll savings or what. And then the other question I had was, it seems like at the outset on the savings insurance, that should have really been included as a use tax way back in 1933 or whenever. And that it seems like it's not that much money, and that at some point that should be done. I know that's going to be very unpopular for politicians to, say that, but, there's no free lunch, and somebody is paying for the insurance.
Thank you very much, Lafayette.
First, on the issue of savings incentives, there have been in many countries, Japan, Europe, in effect, a tax-free savings account, and we used to have one here that was broadly available until the 1986 Tax Reform Act was passed. It was called the Individual Retirement Account. And it was, and I believe it could be in the future, a very effective incentive to get people to save. And I would like to see individual retirement accounts reconstituted as a vehicle for savings. In terms of the insurance system, the federal deposit and this S&L insurance system, I think it is true that those insurance systems should be based on experience. Just as automobile insurance rates are based on experience, we should experience rate both the FDIC and the FSLIC. And I would guess that insurance rates ultimately on FSLIC insured deposits will in fact increase, and they should increase. But that's, in my judgment, different than putting a tax on all depositors.
Let's go back out to Indiana, to Indianapolis. Go right ahead.
Why, thank you very much. I have a small comment, and then I have a question I'd like to have answered if possible.
Please go ahead.
All right, thank you very much. There's always been a lot of mention about people saving money, and it's at an all-time low. But that has a lot to do with, if you put it in the bank 10 years from now, it's not worth anything, so that's probably why the trend's there. But my question is, we pay an enormous amount of tax dollars out, which we don't mind because we want to run the government, and we have organizations that are supposed to be our watchdogs. We never question what they do, and we're always feeling that they're secure and knowing that they are doing their job. But suddenly it looks like we have a bunch of gangsters out there, and now we're asked to bail them out, and they wouldn't do that for anyone else. Could you comment on that?
Sir, you put your finger on a very, very good question. That is, how did we get in this mess, and who's to blame, and who has benefited and profited by it? It's a somewhat long story, and I suppose it really begins with the fact that for many years in this country, we had interest rate ceilings. You could only get so much money for the money you put in a bank. There was a federal law called Reg Q that said you can only get 5.5% on your savings book. Along came some creative financial people. They invented what was called the money market fund. A lot of people put their money into that. Several hundred billions of dollars went into that in the late 1970s. And it dawned on everybody that if we didn't permit banks and savings and loans to compete for that money, the banks and savings and loans were going to run out of money. And that's called disintermediation, and most people who can pronounce it correctly worry about it. And as a result, the first step was we allowed banks and S&Ls to pay savers, like yourself presumably, a competitive rate. That seemed sensible. We then realized within a couple of years that if all you did was allow institutions to pay a competitive rate, they couldn't earn enough money on their investments to pay those rates. So in 1982, Congress passed what came to be called the Garn-St. Germain Bill. And that allowed institutions to make savings institutions and banks to make other investments. And the problem was that there was not enough attention to looking over the shoulder of those institutions. There were not enough regulators, they weren't smart enough, and they didn't understand what could happen. And as a result, some bad actors, some unprincipled people got a hold of S&Ls. Nobody checked them out to make sure that they weren't gangsters. Some of them were. And even some of the people who weren't gangsters were stupid. And as a result, the savings and loan industry as a whole, about 15% of them, went off the deep end, and that is the bag we are left holding. And it is a mighty unattractive package to have on your doorstep, let me tell you.
Let's go out to California. Walnut Creek, you're next.
Yes, Senator Heinz, it's nice to speak with you. I was born in Philadelphia many years ago, and so it's nice to talk to you.
Thank you.
I read Brooks Jackson's, I believe his name's book, Honest to Graft, and in that he paints this picture of how Saint Germain and Speaker Wright pushed through this bill that deregulated the S&Ls, and also he pointed out that earlier on you people changed the $100,000, the $40,000, I believe, deposit insurance to $100,000, and he said those were the two main problems. It makes one think that maybe people in Congress don't have the wisdom to deal with such complex matters, that it's become such a mess because of things that they passed. Then the people stopped a couple years ago $15 billion going to federal regulators to start to clean up this then. And the book goes on to point out how that happened. And I just want to say that to make ordinary Americans pay for fraud and mismanagement is as outrageous as the proposed pay raises, and that these deregulation laws should be repealed, and S&L owners connected with fraud, and that should be prosecuted. And I believe that Jim Wright should step down. Thank you.
There are two kinds of regulatory laws. One set of laws has to do with what institutions can pay you as a saver and what kind of investments they can make with the money that they get from you. And of course, the purpose of any savings institution, an S&L or thrift or a bank, is to take money from depositors, invest it prudently in enterprises that would be beyond the ability of the individual depositor to assess, and so therefore depository institutions perform an absolutely essential function in our society. On the one hand, they're the custodian of our payment system. On the other hand, they're the facilitators of investments. And what we are left with doing, and I suppose we could spend 2 hours on this program trying to assess whether it's Jim Wright's fault or Freddie St. Germain's fault. I have some views on all of that, and if somebody wants to get into that later on, I'd be happy to. But we are left with the following problem, which is that if we don't act quickly, the ultimate problem is going to get bigger. It's already gotten bigger in the last 2 years because Congress and the outgoing Reagan administration did not want to deal with this issue in the context of the 1988 presidential election year. So we lost at least a year and a half there, and what might have been a $15 billion problem 2 years ago is clearly, ultimately, a 90 to 100 billion problem today. We have to deal with that, and we're going to have to scrape up the money somehow to do it. Now, my view is that the last place we should look is the General Treasury. The last place we should look, therefore, is the taxpayer, such as yourself. But it may be that we're going to have to look to the general fund. But if we do, we should make absolutely certain that that is your agents, get paid back. Now, there's a precedent for that. You may remember the Chrysler bailout of the late 1970s. And in that Chrysler bailout, which came before the Senate, I was a member of the Banking Committee then, and which I opposed. I did insist that the federal government be paid back, and went to the Senate floor, prevailed on my colleagues to accept an amendment, the substance of which was that the federal government, as a condition of helping Chrysler, was going to end up with 51% of the stock of Chrysler, which it would then sell at the appropriate time. That eventually became a series of warrants that the federal government held in the final legislation. And as you may know, although I still think it was a bad principle, although I was not for it, the result was that in the case of Chrysler, not only did the government get the $1.5 billion back that the government lent, but we actually made money. The warrants turned out to be worth hundreds of millions of dollars, and I think that is the appropriate way, if you're going to go through something like this, to make sure that the taxpayer's interest is protected. The taxpayer get their money back with interest.
Princeton, Pennsylvania, you're next.
Yeah, Senator Heinz, I'd just like to know why there's so many institutions created whereby the depositor puts the money in, and then years later, all of a sudden the institutions are in trouble. Why can't just the bank manage that stuff? We don't need it S&L and this and this and that. You know, I'm getting scared because I don't have much money, but if I'm going to pay tax on top of the tax on it, you know, it just doesn't pay me to leave it in there. I might as well pull it out and put it back in the mattress like the old days where the people didn't trust it.
Sir, don't do that. Don't put the money in the mattress. It's not going to get any interest for you, and it's not going to do the country any good there. I understand your concerns and your reservations, but I would look at it this way. The fact is that everybody was very short-sighted. When interest rates rose in the 1970s, and we didn't really, any of us, understand the implications of those very high interest rates. We had developed, as has every country in the world, so-called thrift institutions to lend to the housing market, the mortgage market, so that we could further the American dream of home ownership. It's my belief that it's very important that we continue to have specialized housing lenders, S&Ls, if you will, because when you go into economic cycles where the economy contracts or expands, where money gets high or low, commercial banks traditionally have withdrawn from the housing mortgage money market and just not provided credit for housing. Now, I think, therefore, that the mortgage, the savings and loan industry, which is, as you know, by law, has to have the vast majority of its investments in mortgages, therefore performs a very important and valid social function. And if it wasn't for that, a lot of first-time homeowners would still be renters. And that's true now and will be in the future. Therefore, that is an industry that is worth preserving, even though we don't want to do it at your expense, as I described to the previous caller. What I would say to you is the number of S&Ls that have been mismanaged is, relative to the entire population of them, very small. Only about 15% of all the savings and loan associations in the United States are troubled. A smaller number than that were grossly or terribly run, either corruptly or stupidly. And in Pennsylvania, we've been very fortunate. Our regulators have been, largely speaking, on the ball. Our thrift institutions have been, on the whole, quite well managed. Where the situation got beyond the regulators was that in the southwestern United States, a combination of oil prices tumbling and farm prices tumbling over a 4 or 5 year period just created financial problems for that area that nobody anticipated. Plus the fact that in those, particularly in California, the state of California deregulated S&Ls. Our federal regulators weren't up to the task, and as a result, those problems were compounded. Now, I know that that's a lengthy explanation, but I think it should reassure people that at least people in Washington, D.C. are beginning to understand and face up to problems that, whether or not they could have been foreseen, at least are much better understood. And my view is that if we understand how we got to where we are today, we will fashion a solution. And what I am for is increased capital ratios for lenders that venture into areas that they haven't been before, so that we will not relive this experience. So I hope that's helpful.
Stanhope, New Jersey, you're on C-SPAN. Go right ahead.
I'd like to add one additional comment to what the senator mentioned earlier, and that is that I believe that the problem with S&Ls, particularly in California, started far earlier than that. I think the problem was a structural problem that we all saw coming back in the late 60s and early 70s. But aside from that, I'd just like to say that the reports that came out this morning of the comments made by Messrs. Brady and Sununu were just plain dumb, just dumb. It stuns me that men of their supposed political astuteness would even hazard to test such a proposal. I think we all know that the disintermediation that's going to take place in the banking industry, if something that even reeks, even remotely, of that type of an arrangement, will cause troubles that will make the S&L problems just fade into insignificance. And I'd like to have the senator's comment on that.
Sir, I think you make a very good point. for those people who don't use the $64,000 word disintermediation, what it really means is people stop putting their monies into banks and savings and loans, and therefore, when someone comes along to take their deposit out, the bank or savings and loan has investments that are somewhat long-term, like a housing mortgage, and they don't have the money to meet your withdrawals, and therefore the deposit system is disintermediated because the intermediary is in disarray, to say the least. That is precisely my criticism of the proposal to, in effect, levy a tax. Admittedly, 0.3% in some people's eyes may not be large, but in terms of the kind of savings rate that people get, 6 or 7 or 8%, it is substantial, and it would be a disincentive relative to other alternatives, such as money market funds, for people to put their money into thrift institutions or savings institutions of one kind or another generally. And it would, I think, make it much less attractive for people, therefore, to invest in, put their money in these institutions. And if that happens, then the problem is going to get bigger. So I have very grave reservations about the proposal.
According to Associated Press, White House Chief of Staff John Sununu called this idea, quote, an adjustment upward of the current premium structure. How do you think that would play back in Pennsylvania?
Well, as the idea has been put forward, that isn't how it's been described. It was not described as an increase in FSLIC premium rates, which I think at some point and on some basis will eventually rise. They have to be experience rated. But as a means of coming up with the money to solve this problem, I think it is the wrong base. If money from the federal government has to be a part of this, probably does at some point, and I do not think that it is a good cure, in effect, to bleed the patient to make him well.
Let's go to the West Coast. Vancouver, Washington, you're next. This time. What does it mean to you when President Bush says, read my lips? Does that mean no new taxes, no increased taxes? And what does it mean to the folks back home?
Well, I think most people interpret that as meaning no new taxes. It means, most specifically, no taxes that would have a broad impact on working people. President Reagan was fairly strong on read my lips, as I understand. His favorite saying used to be make my day. Clint Eastwood should be very, very happy about the attention that he's gotten from both President Reagan, former President Reagan, and President Bush. But it needs to be said that under President Reagan, while we did alleviate, and I supported it, the tax burden on working people, nonetheless, there were taxes burdens that were raised on other people as we eliminated loopholes. Now, were those new taxes or not? Well, one man's tax loophole is another's legitimate deduction. I think we did the right thing, but again, I think there's a lot of semantics in all of this, and what we have to do is be above board and practical. In this case, I don't think the argument, it needs to be so much over whether what has been proposed or leaked by the Treasury Department is a tax or not. The question is it a good idea? And in my judgment, on the merits, irrespective of whether it's a tax or a user fee, irrespective of whether it is an increase in the premium or something else, it is a bad principle to make it more costly for people to save. It will reduce our savings rate. And the way to increase the wealth in this country is to lower the cost of capital, to increase the savings rate, and that way this country will grow faster and will produce more wealth, and whatever problems we have, whether it is the failing S&Ls or the need to educate our children, will be much more solvable.
Did you get much mail on this?
Not yet. But I haven't been in my post office box this afternoon.
Let's go to West Memphis, Arkansas. You're next.
Yes, sir. I would like to ask Senator Heinz a question and make a comment, please.
Go right ahead.
Okay. First of all, we're talking about saving. okay? We teach our children to save from the time, you know, they're teenagers on and through. This is not going to look good. The next thing I have to say is, why are we, well, first of all, you said that we don't know how we got there. Okay, we do know how we got there on these this big debt we owe. It's because people, from my viewpoint, and I feel like that most of the nation feels the same way, is people in the government lining their own pockets. And it really, I mean, it's very disturbing about this savings. You know, we're going to tax now our savings. And we're talking about people in the government that getting a big pay raise, and they couldn't even give the people a raise on minimum raises.
All right, let me just jump in here and let you respond.
Well, first of all, on the pay raise, I happen to think the lady's right that the amount of the pay raise is exorbitant. 50% pay raise is really unprecedented. $45,000 is twice what the average family in my home state of Pennsylvania earns in a year, and it's proposed to give that all at once to members of Congress, and I just don't support that. As to the more substantive issue regarding savings and what kind of an example we set for our children, I think it's very important not only that government set a good example, but that we put in place dependable policies that do encourage savings. I think savings for retirement is probably the best incentive we can give people to save, to say that you're going to, it is a prudent thing to do, to save for a rainy day or for those needs that you may have when you're older. We have had a very difficult time having consistent policies which have been interrupted, like the individual retirement account has. There are very little in the way of good policy in place to encourage small employers to, on behalf and with their employees, to establish pension plans, and we can do better in that regard. And equally important, I think the government in one other area should set a better example, which is in terms of the annual surpluses that fortunately now the Social Security system is now generating, that we should stop the practice that we're now engaged in, against my wishes and against my vote, of taking those surpluses from the Social Security system, having the Treasury Department borrow them and then spend them as if they are some kind of free money, and making the deficit at the same time look smaller than it is. Those are all things that the government, in my judgment, and that we in Congress should attend to.
Let's go to Hayden Lakes, Idaho. You're next.
Thank you. Should I turn my TV down, or will it?
Yes, please.
Very good. Thank you. I agree with most of the callers. I would like the Senator's response to something that has concerned me. I watched C-SPAN and all the hearings about those splendid bargain sales just before January 1st. I was appalled at what a bargain they were, and how much is lost in tax revenue, and how sure the investment for the buyer of the bargain seemed to be. I'll hang up now and listen to the answer.
You know, the House of Representatives held hearings on that a few weeks ago, and I think many people were troubled by what they saw. I've got two comments on that. In the Senate, we haven't held hearings on the specifics of those deals, and maybe some of those deals were prudent, maybe some of them were not. And if they were not, the Federal Home Loan Bank Board, Mr. Wall and others who arranged those deals should and will, insofar as I am concerned, be held to account. But there is one bum rap that I thought, a cheap shot that was taken by the House of Representatives, people in the House of Representatives, and that was on whether or not the tax breaks that were involved should have been used. And the fact of the matter is that Congress, the House of Representatives indeed, is the place that originates any tax bill. Congress put those tax breaks in place. And Congress should not have put them in place or left them out there if they didn't expect them to be used. And I find it really hypocrisy for people in Congress to say, oh, there was a tax break out there. Why? It's absolutely ridiculous for people to use it. Well, if it's ridiculous for people to use it, what is it for Congress to have created it? So that kind of hypocrisy I have very, very little patience for, even though that doesn't necessarily mean I endorse the substance of every specific transaction created and approved by the Federal Home Loan Bank Board.
Let's go to Annapolis, Maryland for our next call. Go right ahead.
There's always a simple answer to these problems of taxes which the new president was floating, and that is put a tax on prisoners, federal, state, county, and local. They can't get away and avoid it, and yet they owe to the taxpayer for the money that's being provided for their board and keep. An answer, please.
Sir, if that will raise revenue, I'm for it. I'm not quite sure what the means of support of somebody who's in jail is. I'm not an expert on corrections. We do, in many federal prisons, however, require a considerable amount of work. Sometimes it is productive, sometimes it's not. It's generally viewed, I suppose, as part of the process of getting people rehabilitated. But in answer to your question, if we can figure out a way to do it, I'm for it.
Let's go out to the West Coast. Portland, Oregon. You're on the air.
Yes, Senator.
Go right ahead.
Off the television set.
Yes, please go ahead.
Have you considered that the benefits are greater than the premium on this insurance? And if you reduce the benefits to 90% of the deposits, this probably would be, if it was only done on future deposits, it would be stop the bleeding at least. And perhaps it would work towards resolving the whole problem.
Yeah, I think your point is very well taken, and that is what should be our policy with respect to any kind of federal deposit insurance, S&Ls or banks. They are two slightly different systems. And the answer is, first, they should be on an insurance basis. The premium should be adequate to cover the liabilities. Of course, the liabilities are related to how good a job our regulators do looking over the shoulder of financial institutions. There are a couple of kinds of risks that financial institutions bear. One is interest rate risk. The other is investment risk. And where the S&Ls got in trouble is they had never really had to deal much with investment risk. They were dealing with insured mortgages for the most part, and then they got into the world of high-flying condominiums, which were not where the developers were not federally insured, and they just didn't know, in some instances, what they were doing. In terms of oil financing, they got burned there because nobody expected oil prices to drop out of bed in some cases. In some cases, there were terrible conflicts of interest and corruption. That having been said, I think that we can structure a new system where there are higher capital ratios, so there's time to get to an institution before it goes insolvent, that perhaps we should look into what are called risk-based premiums that would be variable. And there are, I think, a number of things we can do to prevent this problem from reoccurring in the future. One thing we ought to look at is the principle of why should there be why should anybody be entitled to more than one $100,000 deposit? What I'm referring to is the fact that a city, maybe your city, would call up a deposit broker and say, here, put our $1 million into 10 different deposit accounts so it will all be covered by deposit insurance. Well, what that does, that means that the substantial depositor, who we didn't really have in mind when we invented the deposit insurance system, is 100% covered and never has an incentive to look prudently as to where that money is being placed, and is only interested in how large a return that they can get. That, too, has to be dealt with.
We just have a couple minutes left, but let's go down to Montgomery, Alabama. You're on C-SPAN. Go right ahead.
Yes, Senator. I am disturbed that the people who need the federal home savings and loan in order to finance their homes in the past have been plagued by this fraud and corruption. And I have an ethical question which arose last week when I read in the paper that our retiring president is moving into a several $million-dollar home in California that has been bought by his wealthy associates, and that he's going to rent it. Isn't that an ethical question?
You know, I'm not sure I'm familiar with all the details of that. My recollection may be wrong, but my understanding is that while it's true that the president's friends made the down payment, there is a financial arrangement where he pays a rent that is apparently a fair rent, and that this was all cleared with one of, I think, the Office of Government Ethics. Now, don't hold me to that, but that is my recollection and my understanding. Exactly how that relates to the very poor principle that we've been talking about of taxing savers, I'm not sure. I don't think there's any federal money involved in that transaction, and thank God.
Republican Senator John Heinz of Pennsylvania, thank you very much for being with us.
Tim, thank you. My pleasure.